In the last 4 trading days, Sensex has gone down by 2500 points, Nifty has gone down by 700 points. So what are the reasons which are taking the market down? What are the reasons which is leading to all this kind of a selling pressure into the market? Today in this particular video, I am going to discuss. Before starting this video, I have already made one video in which I have discussed about what are some of the things which can go wrong in 2022. So I'll highly recommend you to go and watch this particular video, which will give you much better understanding of the same. I've given down some of the articles as well in this particular video description. So do see that particular video and also use that articles. So if this thing is clear, let's get started with this particular video. What are the things which are taking the market down? So first reason is the FII sellings. FIIs are continuously selling. Foreign portfolio investors especially are continuously selling in the market. So that is one of the reason which is leading to the FII sellings. But why FII selling taking place? There is a whole lot bunch of reason why FII selling is taking place. The first reason is the Fed Reserve. Okay, so I would like to take you to December 14, December 15. So before that, let me take you to the December 1st or 2nd week. Okay, in the 1st or 2nd week of December, the inflation was reported in USA 6.8%, the CPI inflation. Now the average CPI inflation in USA is in the bracket of 2 to 3%, and it was reported 6.8%, which was 40 years high. So on 14th and 15th of December, there was one meeting held of Federal Reserve, in which it was decided that 3 interest rates hike will take place in the next year, in the coming year. So because of this particular thing, the market is going down, because the 3 interest rates hike will not be great for the businesses, because they want to control the inflation. They are increasing the interest rates, because once the interest rates will increase, the loans will become much more expensive, and which will not actually support the growth environment in the stock market, growth environment in the businesses altogether, and that will definitely not great for the growth of the businesses. And as a result of which, we are seeing the impact on the market. We are seeing the FII selling. The FII selling is also taking place because bond yield is going up. Now once the bond yield goes up, what happens actually is that bond becomes much better option, because they are much more secure and even the returns are better now. So as a result of which, people generally the money goes from the stock market to the bonds. Okay, as a result of which, the money is now going out from the stock market and going into the bond as well, because of the increasing bond yields, and as a result of which the FII selling take place again. Another reason which is leading to the FII selling or not much of a FII money coming in the market recently is because Indian markets are a bit overvalued. Okay, as a result of which, many of the big equity firms has already said that they see China as a much better investment, at least for the short term, as compared to India. That is true, because in China we saw the stock market continuously going down, but now the Chinese stock market seems to be at much better valuation according to these investors as compared to the Indian stocks, as compared to the Indian stock market. Many of the investors already said that Indian stocks are a bit expensive, and as a result of which, they are not investing, for at least for the short term, but for the long term they are very much optimistic. I was reading like 2 or 3 months before only, there was one article in which C. Wood, who is the head of equity of Jefferies, he said that for Indian market are really overvalued for the short term, but he believed that Indian market can touch 100k in next 5 to 6 years. So if you're a long term investor, then it's totally not an issue, but for a short term investment, for all this kind of thing, this year is definitely going to be a bit difficult, because Indian markets are really overvalued. Okay, the another reason is the depreciation in rupee as compared to dollar. Okay, so as a result of which, the Indian rupee is going down. Many of the investors are not investing into India, because if they invest into India, then they will be actually in the loss because of the rupee depreciation. So these are some of the reasons because of which FII selling is taking place. The second reason is inflation. There's a lot more inflation taking place in terms of raw material cost increase, input cost increase, and all these things. So this is definitely a issue, and certainly Omnicron has actually given the rise to this particular issue. If you just look at in China, because of their zero COVID tolerance policy, many of the ports were closed in China, which has certainly disrupted the international trade. In Europe for some time, even if Omicron is not that much severe, but we saw some partial lockdown in Europe, in many of the countries in Europe. In India we saw some kind of a partial lockdown, some kind of a restrictions. So as a result of which, definitely Omicron has certainly lead to this kind of inflation, certainly lead to hampering the international international trade. The another reason is crude oil price increase. Now when the crude oil price increase takes place, definitely it's a raw material for many of the industries, so that industry's business, that industry's margins are affected. Oil price increase affects the diesel and petrol cost, but crude oil price increase not only affect the common people like me and you, but it actually affects many of the businesses, because once the crude oil price increases, the international trade price increases, the transportation cost again increases, which again impact the margins of the company. Thing which is leading to the market going down is the results. Okay, Q3 results are not that great. Even the Asian Paints recently announced their result, C8 Tire recently announced their result, and many of the big companies recently announced their result. Top leading companies announced their result, and they are not that great as expected. They are just a par estimate, or even they are down. Okay, they are below estimates. So as a result of which, market is reacting negatively to the results, because the kind of valuation been given to the many of the companies, certainly the results are not that great. This kind of negative factors are already there, as a result of which market is not happy with the results. Investors are not happy with the results, as a result of which we are seeing the selling taking place. Okay, the last and the final reason is election. In 2022 there are 5 states elections are going to take place, as a result of which government might come up with the budget which certainly supporting the mass audience, which is certainly making the mass audience happy. Now when the mass audience gets happy because of the budget, it's not good for the environment of the business, and as a result of which many of the investors are not much optimistic for the budget, and actually because of the budget the selling pressure is taking place. Okay, like for example, last year the budget was quite good for the businesses. There were a lot of the steps been taken for the businesses, as a result of which after budget was announced, the market gone really up. Okay, we saw crazy spike in the market. Okay, but this year budget is something which people are not that much optimistic about, that it will be really great for the business and it will be really great for the stock market. Certainly this particular budget might be for the making mass audience happy, so that voting so that the voters can be certainly in their side. These are some of the reasons because of which market is going down. The another thing we need to consider is that RBI might also consider interest rates hike. Okay, so if RBI consider interest rate hike, then again the loan in India also will become much more expensive. I was recently listening to Shankar Sharma sir, one of the interview, in which he said that although the market might not see that great growth, but he said that there are a lot of stocks which can do really well. So find the 5,000, 6,000 stocks in the Indian market. So find the perfect stocks and you will definitely find a great gem which will give a great return this year. So he said that rather than going for the index stocks might not do that well, but there are some of the great stocks still there in the Indian market which can do really well. Now some of the things which you need to observe carefully. First of all, do watch the budget when the budget will be announced in Feb. Do watch that budget. The next thing is do watch that budget. Read about the budget. Read the articles about the budget. It will give you really great insights. Watch some of the videos of the experts, what they are seeing. Watch CNBC. There are many of the experts come on that particular channel. To watch the interviews of some of the great people, and you will get a much better insight. Some of the big investors, watch their interviews, what is their intake from the budget and all these things. Second thing is, in March Fed might consider interest rate hike, so do also study that particular thing. And there is one article which has been given in the description. I would highly recommend you to read these articles to get much better insight. Although I have discussed each and everything, but there are 2 to 3 articles which will definitely help you to understand all these things. So I would highly recommend you to please read this article to get much better insight of all the things which I talked in this particular video. This was it from this particular video. If you like the video, like it, subscribe to my channel and share with your friends. Thank you very much.